So if it wasn't already difficult enough for business owners to access capital in this current climate, SBA under the current administration just implemented changes to lending standards on its FICO SBSS requirements going into 2025 and beyond. And I'm going to get into those changes. I'm going to let you know what has changed. And unfortunately, this is going to be actually on the SBA 7A loan, which is the most common and accessible loan for startups and small businesses. So this is going to actually impact Main Street businesses that are likely like yours and mine. So I'm going to get into the weeds of what this change is, how this change is going to be impactful. And I'm hopefully going to do my best to try to guide you into a process or guide you into a strategy that will help you get around it if you have any plans on exercising access to the SBA 7A loan. So the SBA has, under the current administration, as of June 1st, 2025, it has increased the minimum score requirement for the FICO SBSS in the underwriting process for the SBA 7A loan, which again it was the most accessible small business loan that the SBA offers. So we're going to get into more details about what that loan is, and we're going to also get into the weeds about how this is going to affect business lending as a whole, because you have to understand when these regulations go into place with these government agencies, whether it's the small business lending space or the business lending space, the mortgage space, it trickles out into the private market and the conventional market. So the minimum FICO SBS score required for expedited processing of the small SBA loans increased from 155 to 165. So the affected loans, this change specifically applies to the 7A small loans, which now have a maximum size of 350,000. So 0 to 350,000. Again, the loan that is typically the most accessible to us as startups and small business owners. The impact on underwriting is going to be straightforward. Borrowers who do not meet the higher SBSS score will now undergo the full standard loan process, requiring more documentation and longer review periods. So this is basically saying the low doc program, the low doc, barrier to entry has been raised when it comes to SBA and the 7A loan. So this matters to borrowers because the stricter qualifications for expedited processing. The higher SBSS score means fewer applicants for small business loans will automatically qualify for expedited processing, requiring more to go through a more detailed underwriting process. To return to stricter standards, this is where it kind of starts to branch out to the entire business lending market. These changes signal a broader return to stricter underwriting standards by the SBA, balancing risk mitigation with access to capital for small businesses. So again, if private banks and institutions already weren't difficult enough, SBA loans have a rough reputation when it comes to approval because they're the creme de la creme of lending products when it comes to terms and standards and rates. That having been said, as you can see here, there's a significant change coming in low documentation and overall underwriting for the SBA lending criteria. So let's get into a little bit of details really quickly about that SBA 7A loan for those of you who may not be as familiar or heard about it in passing and aren't really sure of the details of the loan. The SBA 7A loan is usually the most accessible SBA loan for small businesses because it is most popular and the most popular and flexible program designed to meet a wide variety of needs, including working capital, equipment purchases, and debt refinancing. The SBA guarantees a portion of the loan to the lender, reducing their risk and making them more willing to finance businesses that might not qualify for conventional loans. This is the whole point of the SBA. This makes the 7A loan program a cornerstone for small business growth, especially for those with less established financial histories, which is most of us. Why the SBA 7 loan is so accessible? Flexible use of funds. Unlike some specialized SBA loans, the 7A program is highly versatile and can be used for numerous purposes, making it suitable for a broader range of business needs. Reduce lender risk. SBA government guarantee reduces the risk for banks and lenders. This encourages them to approve loans for businesses with less traditional credit histories or collateral. Fewer barriers to entry, low doc. Because lenders have less to lose, they may offer more favorable terms and be more willing to work with small businesses or startups that might otherwise struggle to get traditional bank financing. It's the SBA's flagship product. The 7A loan is the SBA's most widely used and flagship loan program, a clear indicator of its importance and reach in supporting small businesses. So this is an unfortunate change. Why is this going to hit Black America particularly hard? The FICO SBSS, for those of you who may not be familiar, let me give you some quick context. The FICO SBSS score is basically a proprietary scoring for lenders for small business credit risk. So this is it's based on proprietary data that is a collective of your personal FICO scores and your business credit scores and other data that we may or may not be aware of. It's proprietary data. The SBSS score is a specific product of FICO used by financial institutions, and its precise calculation and how to pull it directly is not publicly available. It's lender specific use. So basically what you can consider is your personal FICO scores, your business credit scores, business credit tracking. So credit history on a personal side, length of time in business and operation, your business revenue and cash flow, number of employees and assets, and any public records like outstanding liens against your business, as well as overall business credit scores, is the collective of the FICO SBSS. So going back for a second on why this is going to impact Black America particularly hard, this will hit all American small businesses harder because regardless of racial background, small businesses are struggling to access capital. And I see this firsthand. I'm a business banker that works at a financial institution that does conventional and SBA funding. So I do this and work with this on a regular basis. But Black America is going to get hit the hardest because the data sets that we just talked about, personal credit histories, Black America's personal credit FICO scores, median FICO scores is 627, the most recent data as the time of this recording in 2025. Length of time in business and in operation, it's another area of struggle for us. By the time, usually most of us don't make it past year 1 or year 2 with our businesses. Your business revenue and cash flow, most of us cannot effectively collect that information and report it. We don't document this information well because a lot of times we don't make or have much of or have consistent revenue and cash flow. The number of employees and assets. Many of us are on the back end of having businesses at the scale enough to have employees, and most of us are not going into our business journeys with significant assets. Public records and outstanding liens against the business. We are usually the ones most exposed to debt, struggling the most with debt, leading to us likely having the most negative publicly reported debt and other lien related records. So what makes up the FICO SBSS score, the 155 mark that was originally there already was difficult. It's been up 10 points, which means who knows what your scores and all those different data points have to aggregate out to get to that 10-point barrier and beyond. So this is a quick update I wanted to put out there for the SBA lending space with the 7A loan in particular, because it is actually one of the only loans from the SBA or backed by the SBA. The SBA is not the lender. The ones backing the lender. But nonetheless, an SBA backed loan that is actually accessible to small business owners and startups. This is also something going to trickle out to the lending space as a whole, one that's already tightened up in the last 2 to 3 years. So things are trending in the wrong direction when it comes to business lending, access to capital in this space. My conclusion as far as what to do is using these data points to move the needle. And I hate to sound generic, but at the end of the day, you're going to have to put a serious focus on increasing your FICO scores, managing any outstanding negative debts that you may have, reporting, trying to get them removed and settled and resolved, building up your assets. What I'm going to encourage many of you to do that many of you are taking for granted, especially in the Black community, stop quitting your goddamn job and trying to start a business. Your assets include stuff like 401ks, retirement accounts, things that are funded by your job. So don't quit your job. Cash flow and revenue for the business. This is going to be important. Stop and do not start or do not persist with pipe dream businesses. Get real businesses that can generate cash flow. It is important. Document the cash flow. Stop trying to dodge taxes and write everything off. Report your damn revenue and your cash flow. Length in time in business. Don't start a business until you're ready to sustain one. Do not start a business in survival mode. It is not a good idea. It's not going to work out, and it's being calculated against you. These are somewhat generic, broader scale solutions, but they're very real, actionable solutions. If you want particular solutions to your personal, financial, or business circumstances around what I'm recording on here and what I'm putting out around the SBA funding and business lending all together, get in the comment section down below. I will see how I can assist you. So I want you to comment down below. Let me know what you think of these changes with the SBA and the overall broader landscape of business lending for small businesses and startups. Let me know what you think the impact's going to be for you, regardless of your racial, ethnic, economic background. How do you think this is going to impact you and your business? Have you been exposed or ever dealt with the SBA loans or lending or SBA back lending? Have you ever dealt with the 7A loan in particular? Are you familiar with the FICO SBSS score in the first place? If you are, do you know what it is for yourself? Get in the comment section down below and expand on this conversation. This is a big one if you are a business owner or entrepreneur on any level. So comment down below so we can keep the conversation, education, and information flowing in the comment section. To all my pioneers, welcome back. To my new viewers, welcome in. I want each and every one of you to like, comment, share, subscribe. Super thanks. Support the channel so the channel can continue to support and reinvest back into you. For everybody that does like, that does share, that does subscribe, that leaves this super thanks and takes the time out to support the channel in that way, I want to give you a special shout out. A lot of you, I'm aware, I have tracking in my analytics that tells me who's really doing this on a regular basis and supporting these videos and supporting the channel. It shows your character at the end of the day, because I am one of the few content creators that is authentically from a financial and banking background, giving you quality personal finance and business financing strategies, content, tips, and news, and doing so without driving you through a million sales funnels and trying to sell you a product on every video. So if you want to continue to get raw, uncut quality information, support the channel. If you wanted to get in the description down below to tie in with me on Instagram, the link is in the description for that. If you want to work with me one-to-one to expedite your path in designing your blueprint for prosperity, description down below in the areas I specialize in, how I could assist you there. Other than that, I want every single one of you to stay focused. Stay in motion. I'll see y'all soon.